Hey, what's going on, everybody? It's Mel, and this is another empowerment conversation. Firstly, let me say thank you to everyone who has been watching the conversation that's been going on. Your support is felt, it's appreciated. So right now, before you do anything else, I need you to subscribe to this page. I need you to like. As we're commenting, as we're having conversation, drop your questions, drop your comments. We want you to be engaging, and we want you to be involved. Those of you who are looking to stay connected to the business, you can follow us on Instagram at E-powerment LLC. You also can stay connected to the business, receive motivational quotes from me every single day. And if you text the word E-power LLC to 347-765-1741. All right, I'm super excited about this conversation. I want to introduce you. She is a close family friend. This is no stranger. We know her. She's one of the smartest young ladies I know. Super motivated, super business-minded. I'm so excited to have her with me. We welcome Shana Saunders.
Hey, Mel. How are you guys?
What's going on? How are you?
I'm good. I can't complain. Blessed.
Yeah, definitely. In the midst of all that's going on, you still gotta claim that blessed status for real.
Absolutely.
So those of you who are watching, you guys all know my wife, Melissa. This young lady is one of Melissa's best friends. They go all the way back to high school. She's actually the baby godmother of our first child. We have 4, but the first one is actually a godmother. So I'm just letting you guys know this is history. So I trust her information. So get your notepad out, and you're gonna want to definitely take notes. This conversation is all about real estate. I want to start here, Shana. Mm-hmm. Because in the midst of everything going on, I think especially young Black people, young Black entrepreneurs, young Black men like me, I think that we sort of hit sort of like a roadblock about ownership, right? It's just like, how can we own right now the state of everything that's going on, the economy? So the first thing I wanted to start with is, what is some of the biggest myths that are out there about ownership? Owning homes. I know people always say you have to have an 800 credit score. Don't even think about property if you can't have a $50,000 down payment. Are these things true?
So biggest misconceptions are about the ability to become owners. So one would think, like you said, if I don't have like a 730 and I don't have $100,000 in my savings, I can't become a homeowner. Which is completely false, especially for a first-time home buyer. There's so many different options for you to become an owner and to build, just build out a complete real estate portfolio if you decide to. Their FHA loans, that's something that I really promote for a first-time home buyer, where the credit requirements are not as tight as it's going to like Chase and saying, hey, I just want to get a traditional loan. And the credit scores are different as well. So if you have like a minimum of 500 to 579, you can be a homeowner. Obviously having steady income. And with that credit range, you'll get a 10% down payment. A minimum of a 580 credit score, you can put 3.5% down of the purchase price on the home. Also just having, and always think to have at least 2 to 3% of the purchase price of the house for your closing costs. So there are companies, or organizations that will put you through training programs that may give you grants for, closing costs. I know one of the programs that sticks out is called a NACA program, which is NACA. It's the Neighborhood Assistance Corporation of America. Not to get it confused with the FHA loan process, but NACA, from clients that I know who have used it, that we didn't do real estate directly with that loan, but someone who I've advised on like a rental before, and then they transitioned and decided to buy in a different area. With the NACA program, it does go based off of like median income in a certain area and demographic where you're going to buy. So while I don't speak against any of those programs because they do lead to home ownership, I don't like anything that limits me to a certain area, because in my mind it's kind of like corporate redlining. I'm just going to keep it, I have to keep it real. So don't put me here because this is where I should be, and based off of income level, this is the place to buy, and I have to stay here, and this is my primary residence from now until. While you can purchase other properties under a NACA program, it's still, if you decided to move your primary residence to somewhere else, then it gets a little sticky and it gets a little gray. So I'm a fan of you go directly to whoever you bank with. If you bank with Chase, if you bank with Citibank, Wells Fargo, traditionally is a good a home ownership bank, so to speak. A lot of my clients have used Wells Fargo. And obviously, if you have direct relationships with banks, so like your checking account, your savings, your 403, anything that you have, I would say go to them first, because they obviously know your financial history up into a certain point. So they'll know from a savings what you have, what you can afford, what you should stay away from, in the sense of adding other things on to your credit report. So to take a step back, I think that's a big deal too, with our people not knowing what you should have and shouldn't have on your credit report. So serious delinquencies, that's something you definitely want to take care of.
That's good.
Before you start looking to become a homeowner, you got to knock the debt down. Under 30% utilization of any credit card is a must. Do not get any new credit cards. Do not go buy that new car, you know what I mean, that you have had your eyes on until you bought the house that you're going to park that car at, because the bank will look at it like you now added more debt.
Right.
Ratio has now skyrocketed because you wanted to add another purchase on. So those are things that we just don't know. So we'll start the year. Let's say we get a raise on the job. That kind of automatically goes, let me max out that raise and let me buy this, whatever I've been looking at. Our people. And then you go to sit in front of a loan officer and it's going, well, man, you just left Mercedes for a $60,000 car. And, your car note is $700 a month. How are you going to afford this mortgage?
Right.
Banks look at stuff like that. So it's also a sense of not zeroing out everything on your credit report. I think that's another misconception. Well, I can't have any debt on my credit report in order to become a homeowner.
That's what I've always heard before you start, get rid of all. And I'm like, that like to some people that might be easy, but to people like me, like I'm a single income home, right? My wife is home with my children. To me, that seems almost like impossible. And I'm just like so discouraged. So I'm glad you said that. So I want everyone who's watching, please take note that there are options. Please don't think there's just one path to ownership. Please don't be discouraged because of your credit score, because of the amount in your bank account. We've got to be informed. Take a moment to be informed. So the information you just told us, right? Where do we get that information? Where do we go to?
So you can go to HUD.gov, HUD.gov, and there you click on the FHA link. They'll give you all of the guidelines that I just went over. They'll give you that like in black and white, so you have it and they'll give you what the minimum and maximums are that you're allowed to purchase. And also, I'm pulling up I took a picture of it. I just wanted to make sure I was giving you the right. But every year they update what the limits are for what the price is for the home that you can purchase. So, and it's going to be listed there. So if you're looking to buy a single family home in New York City, so that would be, where is that? Brooklyn, Queens, Manhattan, those places, your single family can buy to $755,000. Given the prices in Brooklyn, that may not be it. But let's say you want to buy a property where you are gonna live there, but you also want to have some income to help you bring down the cost of your mortgage out of your pocket. So now you're a homeowner, you're also a landlord. So you're gonna continue to build your own finances up, which is in turn gonna help you knock your mortgage down. Hopefully you'll apply more money to the loan as opposed to pocketing the money. Obviously use it for the repairs or whatever you may have to do to keep, the upkeep of the property. But for a duplex, you can $980,000. So you have your apartment, you have someone upstairs. So, in New York, you're going to get upwards of $2,000 for a 3-bedroom apartment, depending on your demo and where it is that you are, where you're located. But it can be done. And I think that that's the biggest thing that kind of ruffles my feathers is that we don't have the information. So it's like, if we don't have the information, we don't know. We don't know, and we're scared. And when we think about going to get loans, it's like, oh my God. And let's just say you have this history, and especially now where you've gone through, let's say 3 to 6 months where you're unemployed. So it's like, now what do I do? Obviously, banks are a lot tighter from a employment standpoint, but it's not impossible, is what I'm saying. So you may be on track to, I think what it is that like to repivot. So don't think that because COVID hit, oh, I'm not going to be able to buy. It's just a repivot. It's your time to save more. We also are in what's called like a seller's market. So they are sticking to prices. They realize that people want to relocate from their, $1 million apartments in Manhattan. They want to come down to the boroughs and possibly buy, something with more space so they won't be trapped up in the event that we're now subjected to being home a lot more. Or it's to look to move upstate New York, where you're going to get a lot more space for a much cheaper price than you would in the city.
Right.
You know what I mean? So there are always avenues that we can become homeowners. And I think the biggest thing is just finding that information out.
I think that's so important. I think you said something so key too, is that, and this is going to sound so silly to some people, but a lot of Black folk are scared. We automatically disqualify ourselves before we even have the information.
Yeah.
I think that is so, even the misinformation out there, like everything you're saying right now is opposite of what I thought, you know what I mean? So I want to circle back just for a real quick thinking about employment, right? You said 3 to 6 months of unemployment. What about someone, because what I was told was you had to have been in the same space of employment for at least 3-5 years, right? I recently switched jobs. I was at that company for 14 years. I was at this new company for a year. Is that bad for, like, will that hurt me?
If you have consistent
unemployment, though, right?
if you have consistent income, you are on track to become a homeowner. Your employment is definitely going to be verified. Now they're going up into 2 weeks before your closing date, and some banks are going up into a week before, just given the state of the economy right now. But you transitioning jobs doesn't mean that that's going to throw you out the ballpark for being able to get a loan from a bank. Even if you've gotten pre-approved for a loan, and then let's say now in 3 weeks, you're now transitioned to another job. If you have your offer letter with what your income is going to be, you submit that to the bank, they verify it, you're good to go. If they ask you for pay stubs and you have the pay stubs, you submit the pay stubs. So that way they do see the history that you're still receiving income.
Wow. This is crazy. This is crazy. What about the this you could dispel this if you can. You have to have the down payment money needs to be in your account for at least 6 to 9 months, a year, because they want to see where the money is coming from. That's true.
If I was today, October 20th, if I write you a check tomorrow for $50,000 as a gift and it goes into your account and the bank sees it's there. It's there. You have it. You know what I mean? And that's another thing that's crazy. You have to have, unless you're buying a co-op, like co-op boards want to see at least, like, depending on price, at least 6 months worth of mortgage payments in your actual bank account post-closing. You're going into buying a single family home. You should still have money left over, obviously, but there's no, you must have this amount of money in your bank account. Okay. You know what I mean? That comes into play when you're buying into a co-op building, which is a different process where you have to really go through an approval. You have to have a meeting with the board, and they come up with whatever their questions may be to grant you access to now move into the building.
Right. Okay, I got you.
Yeah.
I got you. So for those of you who haven't picked up yet, Shana is a real estate agent licensed. She has all her credentials. Then when you sit down with people, what's the number one worry that they have?
Credit. Can I afford to buy is always a question, right? So if you have to ask someone if you can afford to buy, you can't afford to buy.
Okay.
Because generally I would say if you're going to set out to buy a home, I say give yourself a year time frame. And it seems like, my God, that's a long time, but it's not. So it gives you an opportunity to first and foremost print out your credit report. Okay. You sit down, go over your credit report. If there's things in collections, you definitely want to get those out of collections. Okay. Bankruptcies are definitely negative, so those will hurt you in the process because that means that you couldn't handle debt, you got bailed out. And for our people, doesn't work in favor like it does for others. So when someone else does it, it's a restructuring of assets. When we do it, we've screwed up financially and don't know how to handle debt.
Wow.
Completely, you know what I mean? Completely different case in that. And I learned that from an attorney that I worked with, not even just in real estate, but in business in general. And she's like, that's the biggest misconception I learned about bankruptcies and having to file them for my people, because, you know, she's not, excuse me, she's a white woman. No shade to that. But then, when I have like a black family come in, they're scared to even do it. They're ashamed and everything. Someone else like, yeah, you know, this happened, life happened. I had to do this, I had to do that. And now I'm here restructuring assets. Yeah, it happens. A secret, really one of these things that I've learned, which is insane. So how we go to school and we will, you know, we get all of the federal loans that one would provide. And now I know I still have some student loans. Some, you know, people watching, you may still have some, and we go through this, how am I going to pay? And then you defer and you do whatever. Other people will get private bank loans, go to school, and then they will file bankruptcy because they have gotten their loan from a Citibank, a Chase, a this. Once you go to bankruptcy, I can't afford it. Swiping it off. You start fresh, zero debt, but you also are going to have it on your credit report for 7 years. So again, it's a good and a bad. But if you do it with having the income to stay afloat post bankruptcy, by your second year out of bankruptcy, you'll get credit card offers. Not to say accept all of them. I'd say start with a secured card, which is when you're going to put money on so that you are going to control what you spend and how you pay. And then you get one credit card. One credit card, no matter who reaches out to you, get one credit card. And that credit card you use for small things. If you're going to buy gas, groceries, even if you have a big purchase, pay more than the minimum that's due. So that way it's not like you're taking forever to pay off this $500 that you borrowed from Capital One or, you know, whoever or the credit card provider is. So
do you not have to have at least 3 open lines of credit to get a house?
You should have 3 open lines of credit, but you also don't have to have 3 open lines of credit. So I'd say I'll have a MasterCard and I have an American Express. If you have an American Express, that's like your thing. You know, if I have my American Express, I'm going to charge up $600 and I'm going to pay $600. So it's showing that you are, as soon as it comes in, it's going out.
Right. Gotcha.
You know what I mean? So I'm also not the traditional, I would say the traditional realtor where it's like, we have to have 3 lines of credit. We have to have 4. If you have 2 credit cards that you pay on time, you have credit history.
Right.
You know what I mean? If you have, again, if you don't have things in collection, things that are not even in collection, but are seriously delinquent, you also want to be leery of, like, you know, you want to be mindful of paying things on time. And right now, it's a really uncertain time for a lot of people. So, if you can't make the payment, don't just like call them. Call Capital One, call American Express, call Chase and say, I'm having trouble financially. What can I do? They'll delay payments. They'll take off late fees. So that way your credit report doesn't just look like you stopped paying just because you decided to stop paying, but you're actually paying, but you're just paying now on a different schedule that's been agreed upon, you know, with the lender.
Right. This is such good information. You guys take notes, write this stuff down. This is good stuff. So the first thing you got to do, right? You want to buy a house, you cramped, you're ready to start. First thing you got to do is get your credit score. Would you say that's the first step, or?
It all starts with credit. It all starts with credit. Yep.
So we're printing out our credit reports. We're looking to make sure there's no delinquencies. How much debt do we have? Not that you can't get a house because of debt, but you also got to make sure you have an understanding of where you are financially. So that's go. So after we figure out, okay, my credit score is not the worst. I have no delinquencies. What's the next step?
You know what? But before we even go to that one of the things too that, like, because I had this conversation with a friend of mine not too long ago. So these credit counselors and debt counselors.
Yeah, I'm going to ask you about those.
You pay them for them to take things off of your credit report. And this is no shade to anyone who is in the industry and the business. I look at my credit report, probably, I'm going to say twice a month, at the beginning and the end.
Okay.
So if there's something off, I am going to pick up my phone. I am going to email Equifax, Experian, and I'm going to provide proof of, no, this isn't right. This isn't, no, I paid this off. Here goes the proof. Here goes a receipt for me paying this off. This,
Right.
I'll update things. So what you're paying for is someone to do that, to do the legwork, to call these people who you could sit down and call to say, no, this isn't right. There isn't, I'm wiping this off of my credit report. That's not how it works, because I also have someone who was in that industry and told me it's like, because our people just don't know or won't take the time, or we're afraid when we see something has gone to collection or this is negative on my report. Oh my God, I need someone else to handle it for me. What you're doing is paying someone, let's say $130 or whatever it may cost you a month. That $130 can go to paying your credit card debt faster.
Right.
So don't pay someone to tell you how to pay your bills.
Right.
That's to me what it boils down to. And again, no shade to anyone in the industry.
No, it makes sense though. Yeah.
They're able to give information or help people who may not even have the time to do it, or even the know-how. Some are not confident enough to pick up the phone and make that phone call. So that's why they rely on a third party. But I've also fell into doing that before. And then once I realized, okay, well, I've gotten a little more movement on these two accounts than you have. Okay, I can just take the money that I'm paying you and I can knock it. Instead of fighting the fact that I don't owe the debt when I actually do, or trying to get it knocked down, let me just pay it off. And if you call them directly, especially right in this very moment, if you call them and say, hey, I know I owe you guys $1,000. I have $700 that I could pay you today or in 2 different payments on the 1st and the 30th, they will do that. This is like,
does settlements also affect your credit negatively though?
You don't want to settle out of everything. Too many settlements is definitely a red flag. That's why it just goes into like, if you can pay it in full, pay it in full.
Okay.
Because some companies too, some of them, and I mean cell phone companies, which can have an impact, they may not have an impact. Like with them, if you decide to now try and reopen service, you'll have to pay them whatever's left over from that balance that you didn't pay. I know like a Sprint, T-Mobile, they definitely do that to come back over. You got to like zero out whatever the balance was.
Yeah, you're right.
To come back and be a customer. So it's like, depending on what the financial situation you're in, if you can pay in full, I advise to pay in full. I'm also not opposed to settling. But you don't want to settle everything, because again, it's like, oh, okay, well, it's debt management that's being looked at.
Right. Okay.
Yeah.
Right. So you want to look at your credit score. You want to make sure you can manage your credit score, manage your debt, get a grip on what you owe, what you don't owe. Do the work, do the research, call yourself if you can. It's okay. You can ask questions when you call the credit card company. That's what they're there for. And I don't care who you get who may think like, why are you asking me? Ask the questions they have to answer them.
Yeah.
What about pre-qualified letters? Is that the next step? How?
So before we even go there, I'm going to say analyze your savings, right? So if you want to go buy a car, if you want to go buy a new shirt, you know what I mean? You may say, okay, well, did I pay X, Y, and Z? Do I have enough money to get lunch for the following week before I go and make this purchase? So now when you're about to go buy a home for $400,000 to $500,000 minimum and going up, analyze how much money you do have saved.
Okay. Is there a threshold of what is safe?
So I'll say this. So based off of where after knowing your credit score,
I'm taking notes, y'all. So like,
it's like knowing your credit score. So let's say if you're going to do your 3.5, let's say your 3.5% down. I'm just pulling up my calculator to give you some round numbers. So if I'm going to buy a house for $350,000, let's times that by 3.5%. Your down payment would be $12,250 based off of that. I'm going to say double that. Have $25,000 saved in your account.
Okay.
So that way, you have money to put your down payment. You have money to close on your home. If you want to make any initial renovations, you have the money that's there, so that you can do that.
So you can buy but still live, if that makes sense.
That's right. You know what I mean? That's what it is. It's like you don't want to because I've seen this, you buy a home for the sake, obviously, to buy, and you start building your wealth with that purchase, but then it's going, man, I should have saved a little more so I can now redo this appliance package. Because appliances can be a penny.
Yeah.
And if they're not included and you have to buy that and add it, or if they are included and you decide to change something, you just want to have money to be able to do that. And then to a bank, it's attractive because you've spent the time knowing that you want to become a homeowner. So I've now saved up until this point.
Gotcha. Oh man, that's good. That's good. So we're looking at our credit score. We're assessing our savings, right?
Yeah.
A ballpark figure of what type of house you want, how much you're going to spend. You have to have a certain amount, so that you're safe. Not because it's mandatory, but you want to always make sure you're doing the best for yourself.
Right.
Excellent. That's excellent. Oh man, that's good. All right. So we're looking at our savings, and then what's the next step?
And then we're going to go into the bank. We're going to go into the bank and we're going to become pre-approved.
All right. So here's my question.
Mm-hmm.
If I go to 4 banks, does that affect my credit score? Does that affect my approval rate at all? Or can I go to as many people as I can? And
I always advise go to your home bank and then maybe one other bank.
Okay.
And then you can compare rates typically, right? I mean, rates right now are under 3. So banks, you may have a bank that has a 2.8, a 2.9. They may offer you, a point to come down off of the your closing costs. Really, it's based off of who you're comfortable with, like what you're feeling when you're sitting in front of them. But it's also that's your reality check of what it is that you can afford. So you may think you want the 5-bedroom home, out in Long Island, and or the 3-bedroom home in Brooklyn that's $785,000. Yeah, because Brooklyn's up there. And then you're going to the bank and doing an analysis of your income, your debt to income ratio, and your credit. It's like, well, Mr. Washington, you can actually afford to purchase a home up to $450,000.
Yeah. Okay.
And so at that point, you are ready to physically hit the ground running and start looking for homes. All homeowners start on Zillow, Street Easy, and we become, and I say we because I've lived it before, becoming licensed. We become our own mini realtors. So it's like we know how to negotiate it. We know what we're going to offer, and they're going to take it. And if not, we're going to walk away. Doesn't work like that. It's the reality check. So if you have a pre-approval letter for $450,000,
how are they determining the pre-approval? What are they looking at? You're looking at
your employment history, your debt to income ratio, credit score,
and your relationship with that bank.
Yeah, and your banking relationship. Yep. That's why I always say go to the one you have the relationship with. So, and not as though if you have all of those things in order and going into another bank, it won't work for you. But if I have a relationship with a business, that's where I'm always going to go, primarily for them to set the tone up if I'm going to stay with them or if I should start looking somewhere else. You start there, and that's where that is the reality check. And then it's okay, I'm going to look for homes. So you start your search, you write down your list of what it is that you want. I call it your wish list of everything.
Okay.
And actually get your wish list together before going for the pre-approval.
Okay.
Because we have grand, and that's just what we do. So have that list. Yeah, get the wish list together. Like throw out every single thing in that your heart will want in your home.
Okay.
And then also know those things cost money. So the marble island that's so pretty, that we see on HGTV, and if that's what you want, write it down. The double refrigerators, the gas range, and all those things, the master suite, write all of that stuff down.
Yeah.
When you go into the bank and you get your pre-approval, you may be, okay, I can get all of this and then some. And then you may go back to say, let's revise this list. Let's think about this really quick. And I always say, get that list together, do your own, and I'm not saying you'll know the pricing, but know that you're going to have to compromise a little bit depending on where you live in the world. So if you're in the boroughs, prices are high. You know what I mean? For just the property within itself. So to get it completed to, your heart's desire, it's going to cost a penny, to get it done. So once you have that pre-approval, at that point, contact a realtor.
Okay,
Some like to
I'm
do
glad
it.
you said that. I
Okay.
want to stop right there because this is
Okay.
where there's a lot of questions and concerns.
Okay.
Why do you need a realtor? Because do you find that that's a question that people ask you? Why can't I do it myself? Why can't I negotiate with whoever's buying the house? Or like, why? What is the importance of a realtor?
Knowledge and information. So based off of your pre-approval and your wish list, they're going to let you know just a hard to the chest. Okay, this is where that point and your wishes. This is where they're either going to meet in the middle, or you may have to look here because prices are up here. They're kind of in the middle here, so this may be a better buy, and then you'll save money on the purchase price, and you can update things as you go along to get them to where it is that you want to be. So to take a step back, as far as buyers, when you think of working with a realtor, it's how much is this going to cost me? This is going to cost me. The seller's agent pays for the buyer's agent. So if I work with you and I represent you, and Melissa, let's say Melissa is selling a home and you're going to buy the home, Melissa's realtor sets with her what the percentage is going to be from a commission standpoint based off of the sales price of the house. So generally, with my company, our we go by standards. It's 6% of the sales price, or we may come down to 5% depending on the price point. The price point of the house. Me as a seller's agent, I dictate what it is that I'm going to offer the buyer's agent. Normally, just given the company I work for, we do a 50-50 split. So if it's a 6%, I'm going to take 3%. The buyer's agent is going to take 3%. The seller is playing that at closing. So a buyer, when you are working with the realtor, they are giving you information and really steering you in the right direction. So it's not that they just want to take my money. No, they're guiding you. They have access to properties that you don't have access to, some that may be on market, some that may not be on market. They'll have an in on maybe some new developments that are coming about. If there's a program of some kind that banks are offering, if there's a way for you to, they negotiate, and that's just what it is. So not to say you can't do it without a realtor. If you don't have a realtor, you'd have to have a great real estate attorney because they can do the negotiation. They'll know the history of the property and everything that you would need to know. But I always advise you to have a realtor because your attorney is not going to come out and look at properties with you. They're going to finish up the deal. So they're going to think that, okay, well, when you bring it to them, you kind of know, you've gone through this, you know exactly what it is. They're going to negotiate for you, and they're going to get all the paperwork.
Yeah. So I want people to understand that a real estate agent, they're on your side, right? They're going to properties with you. They're making sure your wish list meets your amount that you can actually spend. They're negotiating for you. So don't think it's all about their commission. Like, they have to work for that commission. They are on your side. You do need representation. You don't know all the terms. You don't know where to look. You don't know what people are talking about. So you need a real estate agent to sort of like be that middleman. So yeah. Okay, good. So how do we find the right real estate agent? How do we know, okay, this is the person that I should work with?
Interview, I would say a minimum of 2, right? It could be start with someone that you know, start with someone you just have no idea of who they are. Some people, you reach out to who you know, and because they know you, it's kind of, they'll do business with you on the homie tip. I'm not a fan of that. Once you come to me as email Melissa, I am looking to become homeowners. Okay, at that point, that now this relationship, now I'm servicing you and you are my client. So I have a certain list of duties I'm obligated to that I need to adhere to legally and then morally, so that I can make sure you guys transition into becoming homeowners. I'm going to be on time for when we set appointments. We're going to have a list of things we're going to do, and we're going to stick to that. So based off of what you told me and what you're looking for, I'm going to research those properties and I'm going to send them to you beforehand. And we're going to say, okay, I want to see this one. Maybe not. I don't know about this one. They don't have everything I want. And the realtor will say, well, you know what? They're having an open house. Let's just go check it out. So I've had a couple clients that decline, the initial property you send to email, and then I'm going, well, they're having an open house. I really think you should go and try this out. They'll go, you walk through the house, and it's a completely different experience because now you're in it. You get a chance to feel, you look, it becomes your own, and you kind of visualize, okay, well, my TV, not my couch can go here, or I can do this in the kitchen, in my bedroom, I can do this, and the kids have space. So, and not to say your friend can't do that, because they can, but I think it's really up to you to set the tone. Obviously, a realtor should have a certain level of professionalism to set that tone too. But you interview too. And the main thing is you want someone who's going to be available to you, one who's before available, someone who's knowledgeable in what it is that they're talking about. And from neighborhood to price point, to credit, what kind of loan it is that you're looking for. Those are all the things that you would want to have a conversation with your realtor about. And if you don't have a bank, if you don't have a bank that you use primarily, your realtor can also say, well, I know the rate at this bank, make an appointment and go there. So to even take a step back, like that's why like these steps are you kind of marry them into each other. Some will meet with a realtor when they first think that they're like, okay, well, I know I have this amount of money saved. Let me reach out to a realtor and see what it is that I need to, like, what can I do? And if you're not pre-approved, before we go out into the field, as I call it, to start looking for homes, I have to make sure that you can actually afford to buy what it is that you want. And then once
I actually experienced that. I was looking on Zillow and someone told me like, go see it. So I actually reached out to the person, like, I just want to see, like, because I kind of want an idea of what I want. Like, I know what I want, but I want to feel it. And she was like, no. That's not how that works. Like, you get your approval, because why would you come see something that you can't afford? And I was, like, mad offended. I was just like, just want to
open houses? Go to open houses. So anytime I'm driving through, wherever you see an open house, get out. Go into the open house. Go, and you go look. And you get it. You take the printout that gives you all the property information, and if that's the property of interest, take it to your realtor or take it to the bank. Well, this is the price point of the house. Can I afford this house?
Okay.
Like when you open houses is like a future home buyer's best thing to do on the weekend. My brother-in-law, before and even after purchasing a home, like that's just what he spent his weekends doing for a couple years. Him and my sister, they would just pull up to different open houses, and your buyers, and then they love buyers who come in unrepresented, because it's an opportunity to get a direct sale too. So that 6% that they would typically have to split. Now, maybe come in now. Let's see. Let's negotiate this out. It can work, it can work. It can definitely work in your favor. Of course, what an agent never likes is you come to the open house with your Zillow estimates. Zillow overestimates everything. And like we have calls about Zillow and StreetEasy's of the world all the time. Because when you look there, you feel like you have your information to now go out. And now you, as the potential home buyer, you go with, I'm educating a realtor. I know what the prices are. No, that's not it. Sometimes the estimates are way far up. Sometimes they're accurate. So that's why a realtor will literally pull up the property information and let you know, okay, well, this property has X amount of liens on there. This may not be good. It has an issue, as far as what do you call that? Just like the foundation, anything like it will be pulled up from a report, and your realtor can do that.
And they have to legally disclose all that stuff, right?
Everything.
Okay.
Yeah. Okay. So when you deeper into, once you get into, let's say you've identified your home, you have your realtor, you've identified your home, everything's lined up, you're about to put you put in an offer, your offer gets accepted. Before you go any further than that, you gotta get an inspection. And they're gonna check every single thing in that house to make sure that it's safe for you to live in. Everything is in functional order that should be. If there's anything that's not in functioning order, you go back to that as a negotiation tool to either have it fixed or you get some form of credit at closing for that issue. So that way you're not closing and now having to come out of pocket,
right.
You know what I'm saying, for a leak that's somewhere. And that's, I feel like, is always a big thing in the boroughs per se. Yeah,
Yeah, I got you.
for sure.
That's good. That's good stuff. So the last step basically is that real estate, because once you find the right real estate agent, they will now take your hand, not literally, but they'll walk you through the process,
Absolutely.
and take you to the end.
Yep.
To the
And
end.
give you a nice little gift when you close. A fruit basket, cleaning supplies, whatever,
Oh
whatever
man,
they
that's
want to do.
dope. That's dope. All right. So the last question I have for you,
Mhm,
right? Well, the second to last question is,
mhm,
after hearing all of this, right?
mhm.
How will someone know? Okay, maybe I'm not ready to buy. So they set through this conversation. What thought should they have to know that, okay, this is not the right time for me to do this? Like, what should they be looking
I'm
for?
gonna say this, right, email. Don't think of it not being a right time, right? So given like our information, grab a vision board. And my vision board is a whiteboard. So I always like write things out. So based off of like what the information, write out, okay, well, I know my credit score is this. I know I have this amount of money saved. I know I'm employed, or maybe I'm not employed right now. I will start a job soon. So it's really taking self-analysis of where you are. And when you ask yourself those questions, so if your credit score is a 425, you're probably not ready to buy. Even if you have a 720, but you have
No
$3,000
savings.
in your savings account, you're probably not ready to buy. Have the savings, have the credit score, but also don't be afraid if you don't. You begin now to work towards that. So it's like if I'm working towards this 580, shoot for the 600. So you have a 600, you're going to qualify for the FHA loan. So that in combination with knowing you have your savings and you're confident with, you know exactly where you want to be, start the process.
Right. Start the process.
Start the process and save and save some more. It never hurts to save money.
Yeah. Get the knowledge. Start the process.
That's it.
And save. Those are really the key to each one of those tips. Like you got to get the knowledge first. So that's definitely.
Check your credit report
Yeah.
at least once a month.
Yeah, don't
Check
be afraid. I used to be like
Yeah.
that. I used to be afraid to check my credit score. Like I was afraid. I was
Yeah.
embarrassed about the path that life took me on. That I had to take care of stuff, and
Yeah.
it wasn't. I realized like, bro, you had to take care of stuff. This is the way. You still have time to fix it. You still have time to do what you have to do. So don't be embarrassed about where you are. The only reason you can be embarrassed if you're not making any steps to not be there any longer. Move forward. Take the knowledge, take the steps, do the process, find someone to connect you, all that good stuff.
Yeah.
Any last things you want to say about that whole process?
I'm trying to. I just don't be afraid. That's the main thing.
Yeah, definitely.
Don't be afraid. Don't be afraid to challenge a realtor on the knowledge that they have. Don't allow them to steer you one way because of their lack of knowledge or because of your lack of confidence. If that makes sense. No, that's why know exactly everything that you need to know about you. So that way, when you're now sitting across from someone and you're interviewing them, it's not like you meet with them, you walk into an office and it's like automatically, oh well, this is my realtor. No, you have a list of questions. So why should I hire you? Why should you work with me? Like
Wow.
what's your history in the neighborhood? What do you know about the area? Those are questions I think that are fair to ask somebody because you are putting one of the biggest your life's purchases in their hands. So you want to make sure that they know exactly what they're talking about, and that they're not just pulling the wool over your eye. Because there are amazing and honest people. There are some that there's an opportunity to get over, they'll get over.
Yeah.
Or they won't.
I believe you.
They won't show you everything that's available to you indirectly. So you just have to know what you want.
Yeah.
Say what you want. And if it's not, and if you realize your first, I would say give it 2 times if you've gone out with the realtor and the properties they're showing you are just not any way in line with what it is that you've expressed to them that your needs are, then at that point you walk away from the relationship because you're not obligated to keep a realtor for a month, 3 months, 2 years. You sign a disclosure that you're working with them and they're working on your behalf, and that's it.
Okay.
You're not signed to them for 45 days or anything of that nature. If you decide to move on to a different realtor, you have that right.
Okay. All right, cool.
Yeah.
All right, cool. I hope you guys are listening. I hope you guys are taking notes. So my last question for you, right, is in the midst of everything that's going on, I know that you're somebody who's really passionate about politics. You stay on the Black Lives Movement. You stay up on all that stuff. In the midst of everything that's going on, you're one person that is so extremely motivated. Every time I look up, my wife is like, you don't believe Shana's doing this now. Shana's doing this now. Like, you're someone who's always constantly moving, constantly working, looking for new avenues. You're about to make a big move to Georgia. You're a manager. You do the real estate. What empowers you? What keeps you going?
I would say I come from an inner city neighborhood. Obviously, I'm from East New York, Brooklyn. And it's never a comparison, but so I live, this is my house, let's say 4 houses down. I have a friend or relative, same walk of life. I mean, come from the same area, but we have 2 completely different walks of life. Just based off of whatever is going on in the household or just being a product of environment. So I was blessed that my family, we were, working, it was a working family. We were property owners, are still property owners. So there was examples. But my grandfather, my uncles, my mom, they were always teaching me about ownership, building wealth. And it's like, where do you do that? And a lot of people think, owning a house is my wealth. It starts before that. So one of these easy, really simple and inexpensive things that we don't know about is life insurance. Maybe it's not, not to even get off topic, but that's where a lot of wealth gets built. And I realized living in inner city neighborhoods, people will not spend the $25 a month for $50,000 worth of coverage because they don't have the information. And thankfully that wasn't an issue, for me growing up. And I was blessed with the opportunity to be an intern for an insurance company. And I remember riding with the account executives who did not look like me. And they taught me about the importance of having life insurance and having it early. Now, not that my mom has mentioned it, other people in my family, but to have it real life of, no, you can't afford it, because in my mind, I can't afford life insurance. I don't need it. You can die at any minute. Right. Especially now. So you have it. You pass on your child, your whomever you've left now has a minimum of $50,000 that they can prayerfully invest in a piece of property, as opposed to blowing it and doing something else. They've now begun they've begun their wealth train. And what motivates me to just continue doing my thing is that I didn't see a lot of that where I came from. So my goal, my life's goal, and it's one of those things that hit me not even too long ago, was to inform, give the information that people need, people that look like me. And again, I'm not prejudiced, and I would help any single person who needs the help. But I know that our communities need people that look like us to come in and say, no, you can do this, and this is how you do it.
Yeah, trying to scam us, but trying to help us. Yeah,
and really, really forcing this ownership piece down the throat of young people who look like me. Because when I started in real estate, I started literally from watching $1 Million Listing, and I watched Frederick Eklund sell hundreds of millions of dollars of Manhattan property for Douglas Elliman. So initially, okay, I'm going to become a realtor, and that's where I'm going. I'm going for the luxury market. I reached out to Douglas Elliman, had an interview, signed on, and became an agent with Douglas Elliman. And after and getting into it in a Fort Greene office, and I had to sit for a minute and going, my friends can't afford this. It's not where I didn't become a realtor for the glitz and the glamour. And it took me a minute to understand that. But I also had to understand what I didn't want. I didn't want to leave my neighborhood and alienate my people and make a whole bunch of money just for the sake to say I did it, and end up on $1 million listing, because that would do nothing to the community that I came from, that I love, that made me the woman I am today. Obviously, with the with my upbringing from my family, but my goal is to always inform our people that we can be better, we can grow, we can build wealth right in our own communities. No matter how much gentrification is happening. They're coming in with money they've been gifted and granted through life insurance to buy your neighborhood. So we have to start with that same mindset of building wealth for our community. And ultimately, it took time, and even being on a sales team, and we have, great properties of luxury market, but it was really a real life conversation that my friends with their children, and some of them have multiple children, are not looking at $1.5 million 2-bedroom apartments in Manhattan, or the the $2.9 million brownstone in Bed-Stuy. They can't afford that. They're looking for $400,000 to $450,000 or $375,000 to $400,000 one family home that they can start in. So I had to take myself out of luxury real estate thinking and come back to the first reason why I wanted to become a realtor, and it really was to give my friends information that they too could become homeowners, and that we could rebuild our neighborhood piece by piece. So my goal, now, even transitioning to moving to Georgia, it's still providing my friends with the knowledge to know that you can buy anywhere. You're not limited to buy in New York. You're not limited to buy in New Jersey. You can become an investor based off of the property that you purchase in your home state, because the property is going to get equity. Pull that equity out. When you pull your equity out, buy another property. Put some tenants in it. Allow that to pay for itself. You'll get some money from it as well, to put it in your pocket, save, and now we started for the next property. And that's something that doesn't come across the desk. We were never taught that in school, and it just wasn't something that was promoted because we didn't know. We didn't have the knowledge, but thankfully my grandfather, he owned 2 homes growing up, the one that we lived in and one across the street where we just had tenants in, and it was his way to always make sure that his family was taken care of.
Wow.
Yeah.
Yeah. Just the understanding that you can build wealth is what fuels you, and the fact that you're so motivated to make sure the people that look like us have the information to build wealth also. Yeah, man, that's dope. That's dope. Shana, we got nothing but love for you over here. Good luck as you move and as you go to all these new adventures. I know when you get out there, you're probably gonna open a restaurant. I don't even know when you're gonna be.
Even my vision board is so, I have like different ideas every day.
I can imagine if you might be ready for the freaking mail when you get.
Your Lance Bottoms better watch out.
No doubt. Like, you just do whatever you think you can do, and I love that about you. We're proud of you. Thank you so much. Let people know where they can find you.
Okay. I am on Instagram. My handle is Shana. That's SHANA_M as in Mary _Saunders. SAUNDERS. Facebook is Shana Saunders. Feel free to message me, follow. I'll follow back, answer any questions that you have, and steer you in the direction of not the perfect, but great realtors that are on my sales team, some that are not on my sales team, but some I know just based off of whatever our initial conversation may be, that will work for you. Just, because I'm transitioning into Atlanta, I would want you to be with someone who's going to be able to walk you through this process the right way.
Right.
Yeah.
Dope. All right, you guys, hit her up. Listen, I love you guys so much for watching. Thank you. Hit that like button, that share button, that comment. Send it to someone you know. This has been on their mind. They've been trying to look for property, all this good stuff. There was some great information shared here today. Until next time, I'm grateful for each and every one of you. Deuces.